Welcome back, ladies and gentlemen. It is the beginning of July, and you know what that means. We have numbers for June in on the Denver real estate market that we're going to go over together, take a look at, see what the market's doing, instead of just watching, looking at headlines and just, feeding off of their information. Let's dig into the real numbers so you know if it's a good time to buy, is it a good time to sell, or should you just stay put. So as usual, I haven't reviewed these numbers. I haven't checked into them. So as always, we start with the closed price because that's really what we all want to know. Are prices going up? Are they going down? What are they compared to last month from year over year? And then we're going to look at all the stats across the board for the Denver metro area. Okay, so I'm logged into the Denver Metro MLS. Now this is going to encompass stuff up to about Boulder, maybe a little bit of Fort Collins, some down to Colorado Springs, but just a little bit. But mostly it's going to be that 470 loop. Is going to be where this information typically comes from. So starting with the closed price. Now looking at the median price, it looks like for the month of June, we closed at $576,173 as the median close price. Month before was at 568, so we saw a little bit of appreciation, but not as hyper as it has been in the last few months, but still going up in price in general. The market likes that, right? Especially if you're a seller. If you're a buyer, maybe not so much. Now, compared to last year, we were at 585 in June. So we can see once again, as you know, April in 2022 was the very peak, and we were at about 600,000 for the median close price, and we just steadily dropped down to 590, and in June was 585. So we're at 576 this June. So we're down about $9,000 year over year. I think that's a little over 1%. So nationwide, dropping in price by 1 to 2% is a big deal, but on our more local market, we had such an acceleration in price that down year over year, I really think with everything that's going on and where interest rates are, that's actually really not bad. I don't think anyone predicted we would bounce back as much as we have. I mean, we were down at 520 in January. So in 6 months, we're up $55,000. So we're up more than 10% just since the beginning of January this year in 2023. All right, so that's on close price. Now, you might see some people talk about the average price versus the median price. So let's take a look here. So the average price is $694,000 for the month of June, where last year it was $699,000. So we're down about $6,000 there, about 1% of a drop there year over year. Some newspapers and headlines talk about average versus median, just kind of a personal preference. They both kind of portray the same thing. On to new listings. So what is the supply and demand doing? So it looks like in June, we had 8,800 new listings, up from 8,300 the month before and up from 7,400 in April. Now, compared to last year in June, we had, that was our peak, 11,584 new houses to hit the market in June of 2022 versus 8,800. So we're going to show headlines as being inventory down by 25% year over year. How does that stack up in a much bigger picture? So we were just looking at the last 3 years of data. This is, over the last, 15 years approximately of data. So June 2023, we had 8,800. June of 2022, we had 11,500. June of 2021, 11,300. June of 2020, 11,000. So it looks like about June is just about the peak of new listings coming onto the market. So what can we expect? Well, if history is going to repeat itself on this data, then July, we should probably have less new listings hitting the market. And this is what's driving our price stability right now, is that we just don't have a whole lot of stuff coming on the market. A lot of people feel stuck in their homes. We'll talk about that a little bit more in a few minutes here. Amount of active listings. So this is the amount of stuff sitting on the market for sale. Now, what's interesting is that this number is creeping up. So we're sitting at about 11,100 units active on the MLS to buy. That's up from last month, 10,500. Now, last year, where were we? We were at about 13,000 active listings on the market. So we've got 20% less this year than we did last year. What does that look like historically? This chart is just like a heartbeat. The amount of active listings seems to peak out in the summer, late summer months. And so things do start to slow down this time of year. And so even though we're not getting a lot of new listings, generally buyers are pulling back. It's summer mode. Lots of people are on vacation. So the amount of active listings starts to climb. Months of inventory increases. And that's what drives generally our price drops by 5 to 7% from now, or from about a month ago, actually, until about November, December, approximately. And that's pretty cyclical year after year after year. Okay, on to pending listings. So how many people are putting out offers and getting properties under contract? In June of this year, 6,700 approximately went under contract, just up a little bit from May, and that was flat to about April. So we're pretty flat, usually June. So this is what's interesting, is that usually, and I'm going to zoom out here because the last few years have just been goofy as all get up. Last year, May was the peak at 8,500 under contract compared to this year, it's 6,700. That's a huge reduction in how many properties have gone under contract. Year before, June was the peak at 9,200. Year before, June was the peak at 10,400. So from 2020, we had 10,400 properties under contract at this time, down to 6,700. What is that, 40%, reduction in the amount of properties to go under contract. Now, from prior years, June had about 7,300, 7,000. So, we're just a little bit under those numbers, but we're having a knee-jerk reaction to interest rates being at 7%. And, compared to the last few years, I've been so crazy hyper. It just feels slow out there, even though there's not a ton on the market right now. So then that leads into closed listings, right? Because once you get it under contract, typically it takes 30 days to close on a property. In May, we had 6,700 close. In June, we had 6,500 close. So dropping in closings, and that is pretty typical. Even last year, we went from 8,500 to 8,200. Year before, we went up in 2021, but nothing was normal about that year. Same with 2020. We zoom out, and we can see the peak for closings is generally June. It was in 2018. It was right there in 2019. It was there in 2017. So that's about the peak. So what I'm going to expect is closings to start dropping, as they have for every year since we've been tracking this data. All right, days in MLS. What's going on here? Days in MLS have just plummeted like a rock over the last few months. Since we had a spike in inventory last year, we got up to 35 days on market, dropped all the way down to 7, and we bumped up to 8. Not uncommon. Summer months, things start to slow down a little bit. But still, 8 days on the market on average is just nothing, folks. Month supply of inventory. So it balances out active listings coming onto the market and active listings that are for sale. And what we can see is that the months of inventory is increasing. We went from 1.9 up to 2 months. Not a big spike. Last year, at the peak, we had 2.5 months in September, but if you remember last year, it felt really dangerous, even with 2.5 months supply of inventory, because the closings were so far down. So with this data, the problem with data is that if we don't have enough of it, it's hard to really get a pulse on things. And, with how many properties we have coming to the market, it's just not maybe the most reliable data, because any little hiccup can just send things way out of whack. All right, percentage of closed price to list price, we're at about 100. So if you're priced right, you're getting your asking price for the property. The dollar volume, which we don't look at too much, we closed about $4.5 billion worth of properties in June of this year. Last month we closed just under 4.5, and cyclically, if we zoom out on this, that's what's interesting, is that we're actually still, get rid of these last 3 years because we all know they were goofy with COVID. We're still closing well above 2018, 2019 levels. And that's primarily, appreciation from these times is up like 30 something percent still. It's pretty wild. Then showings till something goes under contract, 9 showings on average until you go under contract. If you hit over that, you're probably a bit overpriced. And then the amount of showings per listing right now is at 6.6 per month. So if you're on the market, expect there to not be a ton of showing traffic. So 7 showings in a month. And so expect it, if you're trying to push price a little bit, I would expect 4 to 6 weeks to go under contract, and likely a little bit under your ask price. So what does that mean going forward? Well, I always like to concentrate on what the numbers do cyclically every single year, every single quarter. We can't predict if the rug's going to get pulled out and the bottom's going to fall out of the market. No one can predict that. They've been predicting that since 2015. I mean, just give it up already. Nobody knows what's going to happen in the market. I'm wrong all the time. I'm the first to admit it. You've heard me say that a whole bunch, but I just try to focus on what the numbers do. So this is what always happens this time of year. So this going back to the closed price for the Denver metro area. Real estate prices don't always go up. Let's go back to 2018, more of a normal year, still was hyper. We can see May was the peak at 410,000, and we dropped all the way down to 385,000. So that's what, a $25,000 reduction in price from May until January. I mean, that's a solid, 6% down, and then we go up and top out and make a new high at 422, but then we drop down again to 408. So there's another, few percentage drop, and then we go up. So this happens every single year, and part of the driving factor on that is just supply and demand. This time of year, especially in Colorado, a lot of people go on vacation. A lot of people have been beat up in the spring months from being a buyer. And so they just kind of hit on the brakes and just kind of step off while summer's happening, kids are out of school, lives are busy. And every single year it leads to price reductions. Right now is our peak time for new listings hitting the market, as we just saw, but closings start to drop. So the months of inventory start to go up, meaning price reductions, things like seller concessions to be more competitive when putting on your house on the market are the norm. So I would expect, if we're sitting at 576,000 of the median sales price, I would expect over the next handful of months until about December for that price to drop down anywhere up to about 5.25%. From what we're seeing. So we could see, 5 to 10% reduction in prices going forward over the next handful of months. So if you're a seller, just have those expectations in mind. It's probably going to take a little bit longer. Your house is going to have to be presented nicer, and you're probably not going to get top dollar like what's happened over the last month or two, if history does repeat itself this year like it does every single year. Now, if you're a buyer, this is where you should really start stepping into the market. Starting from now until about December is going to be the best time of year to get any sort of deal on a property or ask for seller concessions. Where most buyers are stepping off the gas, this is where you should be stepping on the gas. I'm Alex Saldana, and I try to answer all the questions you homeowners and potential home buyers have in the Denver metro area. And if you want more great content like this, I promise to keep putting it out. Just hit the like and subscribe button. And I promise not to be clickbaity or too over the top on anything. And if you want my insights on one of my favorite suburbs of the Denver metro area, watch this video. Until the next time, happy housing.